so this is something that we can actually look forward to, right? So now, the thing that we're going to look at, remember that this is a very important area. You guys remember this arrows, ne? Yeah. So this is a very important area, right? Very, very, very important area. That means that now the CPI has the audacity, the lever, to either give us a proper discounted price, where as consumers we can actually take advantage of it and consider taking long positions, right? Because now, if we're just looking at those two, we're not even considering the fact that this is actually the yearly low, right? This is a very dangerous situation. So now let's say that maybe this is a yearly low. So, but the distance between here and there, now let's look at it. Okay. We are midpoint of the yearly movement, price movement, right? We are at the midpoint of the yearly movement. That means we are going to go fast. It's relatively equal. Are we okay? That means that the market, it retraced 50% of the distance that it made throughout the year 2022. Are we okay? So if it retraced nearly, not nearly, exactly, but you can see it there, right? 104,932. That means it's exact, right? So that means that, like, if we go into look for possible long positions, at the very same time, we have to understand that the probability of breaking below a yearly low, they are there, right? But yet in the very same light, we want to liquidate the yearly high. That means the 2022 high, we must liquidate it in order for us to create a new yearly high, which is 2023, before the reduction in price. And also we're currently looking for possible removal of the floating supply, isn't it? So that means that the CPI, the thing that we want it to do, right? We want it to somewhere spike below this level, maybe, or maybe just somewhere around here. But like if it can spike here, that will probably be nice. Spike below this level here, right? And if it does make a huge spike, that means this area here will give us at least the probability of a further increasing price. So this is just basically based on this year's move, right? So now we go into the daily time frame and see what is the one thing that can lead to that reduction in price. Right? What is that one thing that can lead to that reduction in price, isn't it? So the CPI, no, man, the economic events such as CPI influence, those ones, they just, people are trading them because they're desperate. We're talking about things that can actually have a CPI does make a movement, but right now, the reason why the CPI is going to make a movement is because of Black Friday and festive seasons. I think the next year's, the one that is released, maybe probably like early next year, probably going to have the one, it's going to be the one that is a bit better. Because I don't know if December we're going to have a CPI, like based on calculation on events that have been occurring throughout December. So I think maybe like Black Friday one, but the December one, I think maybe next year, January, right? So, but like for now, the one thing that we can actually look forward to is that like we can actually expect this, right? So now look at the same thing that we're going to look at. Now, this is already a situation that is a bit of a problem, because now you have the multiple retest of this set area, right? So now if we're getting a 75 BPS, the probability of price actually reducing in value or spiking a bit further to the downside, that will probably be a good thing. Or already the market should be on its way to this area here. So if you already have a market on its way to this area, let's go on a weekly time frame so that we can look. Yes, this is the area that we want, right? This is the area we want. Are we okay with that? This is the area that we want, 99 or 100, right? So that means that like now, if we're going to look at it from this area and say that, okay, that means that like throughout the course of this week, I don't know when the CPI is. Let me just check quickly. Not necessarily the CPI, but USA CPI month, we have it on the 13th. And then again, okay, this is good, right? this is good because now what is going to occur is that we're going to have Tuesday, we might have a CPI that is intense enough to bring us into this area, right? That will probably be a good reaction to the problem that we're already encountering, right? So you've got a reaction pushing price to the downside, and then the consumer price index, yeah, no, that is the Tuesday one. That means that like on Wednesday, the probability of us seeing a huge push to the upside based on the Feds, it's going to be a probability. I think it's on Wednesday, right? On the 14th. So the FOMC, federal funds rate, right? So the federal funds rates might actually provide a solution within the market. Are we okay with that? So, but again, the nice part is that like if we can get an intense push to the downside, therefore the federal Fed rates, what they're going to do is that they're going to give us at least a spike nyana to the downside, maybe, just maybe, close enough to liquidate the yearly low. And then we can actually end up seeing a strong push to the upside, resulting in the formation of a strong week. You know, after we get a strong week, the main objective for us is to end the year at least at this level here. At this level, you see the same level that we are at 50% of the movement, we must come back and end the year there. So if we end the year there, the probability of us pushing price to the upside to liquidate this high a bit before the reduction in price, now they will be there. Are we okay with that? So the main objective is to close at least 50%, near 50% of the entire yearly movement, regardless of any movement that occurs. We need to close somewhere around there, or at least above, you know, or at least 70% of the yearly movement, you know, and in the 70% region. So are we okay? So now in simplicity, we're going to look for possible long positions roughly around this area here. I think here we'll do. It's not that far, ne? It's not. Right? And then we bring it somewhere around here. So they're probably going to take at least